I'm here today to tell you something that many will dismiss as pure fantasy, an outlandish claim from a perennial bull, but I assure you it's a reality unfolding before our very eyes. We are not just on the cusp, we are already well into the journey towards $100 silver. This isn't a speculative whisper, nor a wishful projection based on distant hopes. This is a conviction built upon decades of observing market fundamentals, understanding the true nature of money, and recognizing the undeniable forces that are reshaping our global financial landscape. And I'm not talking about some distant theoretical future, some far-off decade where anything is possible. I'm talking about events, market forces, and fundamental shifts that are right now, as we speak, paving an undeniable path to that triple-digit valuation. The world as we know it is changing at an accelerating pace, and silver, often overlooked and misunderstood, is uniquely poised to reflect that dramatic transformation in a way that will astonish the vast majority of investors. The groundwork has been laid, the seeds sown, and the early sprouts are already visible to those who know where to look. For too long, silver has been an underappreciated, often dismissed asset. It's trailed behind its more glamorous cousin, gold, frequently relegated to the status of an industrial metal with a quaint monetary legacy, but not much more. The prevailing narrative suggests it's too volatile, too niche, or simply too cheap to matter significantly in a diversified portfolio. Yet beneath this surface of perceived normalcy and mainstream indifference, a profound, almost revolutionary story is brewing. It's a narrative of fundamental revaluation, driven by an intricate dance between shrinking supply, exploding demand, and the inevitable consequences of reckless monetary policy. The mainstream financial media, often echoing the sentiments of central banks and established institutions, paints a picture of controlled inflation, of markets functioning efficiently, of a steady hand guiding the global economy. They speak of transitory inflation, of contained risks, and of a return to some semblance of pre-pandemic normality. But I see something else entirely. I see a system under immense, unprecedented stress. A system where the true inflationary pressures are being deliberately obfuscated, where real wealth is quietly being eroded, and where the manipulation of precious metals prices, particularly silver, has become an open secret among those who truly understand these underlying market mechanics. The disconnect between reality and perception has never been wider, and it's this very disconnect that creates the colossal opportunity we are discussing today. So, how exactly does an asset, seemingly mired in decades of underperformance, an asset so often overlooked by the masses, suddenly catapult itself to such an extraordinary level? What are the key, almost irresistible drivers that will ignite this monumental surge? And perhaps more importantly, what has been holding it back for so long, preventing true price discovery, and why are those artificial constraints now failing, crumbling under the weight of fundamental truths? These are the critical questions, the open loops that demand our attention, because understanding them is the key to comprehending the colossal opportunity that lies ahead. Let's start with the most foundational aspect, silver's dual nature. It is, unequivocally, both an industrial metal and monetary metal. This unique combination makes it profoundly different from almost any other commodity. On the monetary side, silver has thousands of years of history as a store of value, real money, a hedge against debasement. Before fiat currencies became the norm, silver coins were the lifeblood of economies. That inherent monetary characteristic, that historical DNA, never truly vanishes. It lies dormant, waiting for the right conditions to reawaken. And those conditions, my friends, are now upon us with a vengeance. We are witnessing an era of unprecedented monetary expansion. Central banks globally have engaged in what can only be described as an experimental open-ended printing spree. Trillions upon trillions of dollars, euros, yen, and other fiat currencies have been conjured into existence, unbacked by anything tangible, diluting the purchasing power of every single unit already in circulation. This isn't just a slight increase in the money supply. It's a parabolic explosion that has fundamentally altered the value proposition of fiat money. When you print vast quantities of something, its value inherently declines. It's a simple, undeniable economic law. And what happens when fiat currencies lose their integrity? People naturally gravitate towards assets that have maintained their value for centuries, tangible, finite assets like gold and silver. This erosion of purchasing power, this deliberate debasement of currency, is not a temporary phenomenon. It is a long-term, systemic issue, and it provides a powerful, almost inescapable tailwind for silver as a monetary safe haven. Now, layer onto this the industrial demand side, which is experiencing its own revolution. Silver is not just a relic of the past, it is an indispensable component of the future. Think about the green energy transition. Solar panels, electric vehicles, charging infrastructure. All of these require significant amounts of silver due to its unparalleled electrical and thermal conductivity. As the world pushes aggressively towards decarbonization, the demand for these technologies will only accelerate, and with it, the demand for silver. Beyond green tech, consider 5G technology, medical applications, advanced electronics, circuit boards. Silver is absolutely essential. We're talking about increasing demand from sectors that are themselves growing exponentially, placing immense, sustained pressure on silver supply. And this is where the supply-demand dynamic becomes truly compelling. While industrial demand is surging, global mine supply has been stagnant, if not declining, for years. Silver is often a byproduct of mining other metals like lead, zinc, copper, and gold. It's rarely mined as a primary target. This means that its supply is inelastic and less responsive to price increases in the short term. The easily accessible, high-grade deposits are dwindling. Developing new mines takes years, billions in capital, and faces increasing regulatory hurdles. The result? A widening chasm between the metal the world needs and the metal the mines can provide. We are literally consuming more physical silver than is being dug out of the ground each year. This deficit is being met by drawing down above-ground stockpiles, which are finite and diminishing. It's a simple equation: decreasing supply, increasing demand. When this happens in any market, a significant price adjustment is not just probable, it's inevitable. Here's a critical point that many overlook, and one that I've spoken about extensively: the disconnect between the paper silver market and the physical silver market. For too long, the price of silver has largely been dictated by a massive, opaque paper market, derivatives, futures contracts, unallocated accounts, that represents many multiples more silver than actually exists in physical form. This creates a powerful mechanism for price suppression, where vast quantities of paper silver can be sold into the market, driving down the price without ever having to deliver a single physical ounce. It's a game of smoke and mirrors, a financial illusion designed to keep the lid on true price discovery. However, this paper market, no matter how vast, cannot forever defy the laws of supply and demand in the physical world. The physical market always wins in the end. And we are seeing the beginning of its victory. People are waking up, demanding physical delivery, draining the vaults, and exposing the fundamental weakness of a system built on unbacked promises. If you're finding this perspective insightful, please consider giving us a like and subscribing to the channel. Your support truly helps us cut through the noise and share these crucial insights. The global debt picture is another monumental factor. Governments and corporations worldwide are burdened by astronomical levels of debt, far exceeding their ability to repay under normal circumstances. The only way out for many nations, it seems, is through further debasement of their currency, inflating away the debt, effectively transferring wealth from savers and fixed-income earners to the indebted governments. This isn't a conspiracy theory, it's a historical pattern repeated countless times throughout history. And what is the ultimate protection against such debasement? Hard assets, real money, silver. Now, after laying out these foundational elements, I want to bring you back to my core assertion. The path to $100 silver is not merely a possibility, it's an inevitability. The forces I've just described, relentless monetary debasement, surging industrial demand, declining physical supply, and the impending failure of the paper market to control price, are not hypothetical. They are actively shaping our financial landscape right now. This isn't a future scenario. It is the present reality, accelerating every day. The current price of silver, whatever it may be as you hear this, is a profound misrepresentation of its true value. a price artificially suppressed by a system that is rapidly losing its grip. The true climax, the undeniable tipping point, will occur when the physical reality of silver finally shatters the illusion of its paper market. We've seen years, even decades, where the price of silver has been dictated by promises on paper, by derivatives, by unallocated accounts that represent many more ounces than physically exist. But the game is changing. The demand for physical silver, driven by both industrial necessity and a growing global realization of its monetary significance as a hedge against inflation and currency debasement, is now consistently outstripping actual mine supply. We are depleting above-ground stocks at an accelerating rate. This isn't just a squeeze. It's a fundamental repricing driven by a shrinking physical availability against an insatiable demand. When the market finally wakes up to this undeniable scarcity, and the ability to deliver physical silver becomes paramount, then and only then will we see the true price discovery begin in earnest. The price will have nowhere to go but significantly higher, as the market desperately seeks to balance the insatiable demand with the ever-dwindling supply. So, what does this mean for you? It means understanding that the current price is a profound misrepresentation of silver's true value. It means recognizing the immense opportunity that lies before us, an opportunity born from a financial system fundamentally out of balance, a system teetering on the edge of a paradigm shift. This is just the beginning of our deep dive into the coming silver surge. In Part 2, I'll reveal the specific triggers I'm watching, the timelines, and critically, how you can position yourself to not just witness, but to benefit from this historic shift. Make sure you're subscribed to this channel and have your notifications turned on so you don't miss that crucial follow-up. Don't just watch this story unfold, understand how to participate in it and protect your wealth in these turbulent times. I've spent decades in these markets, watching, analyzing, understanding the intricate dance between true value and perceived price. What I'm telling you now, what my experience screams at me, is that we are not merely approaching a tipping point for silver, we are living through its initial tremors. The pathway to $100 silver has not only begun, it's accelerating, and for those who aren't paying attention, the shockwave will be immense. Think about the sheer force of a tsunami. It starts as an imperceptible ripple in the deep ocean, building momentum, gathering energy from unseen tectonic shifts. Then, as it nears the coast, it rises, an unstoppable wall of water. That, my friends, is precisely what's happening beneath the surface of the silver market. The vast majority of investors are still on the beach, oblivious, or perhaps worse, dismissive of the deep, powerful forces at play. They're looking at the current price, seeing little movement, and failing to grasp the monumental imbalance that has been building for years, even decades. But for those of us who have dared to peer into the abyss of market manipulation and true physical scarcity, the signs are not just visible, they are screaming. Let me contextualize this for you, swiftly. We've discussed the long, brutal history of price suppression, the immense paper shorts that have artificially depressed silver's value, allowing industrial giants to consume it at unsustainable bargain prices. This isn't a conspiracy theory. It's a demonstrable fact of market mechanics and financial reporting. The bullion banks, acting as agents, have for too long maintained a phantom supply, a digital illusion, while the tangible physical metal drains from vaults worldwide. The critical juncture we've reached is that this illusion is now paper-thin, stretched to its absolute breaking point. Every ton of silver extracted from the earth is immediately consumed, often more than consumed, leading to a structural deficit year after year. Where do you think this deficit is being covered from? From above-ground inventories that are shrinking faster than most dare to admit. The problem, the core conflict, is that the music is about to stop, and there aren't enough chairs. Industrial demand, solar panels, electric vehicles, medical applications, 5G technology, it's not just increasing, it's exploding. These aren't discretionary uses. They are fundamental components of our modern, technologically advanced society. Silver isn't just nice to have, it's essential. And yet, its price is suppressed to levels that barely incentivize new mine production, let alone exploration for future supply. This is a formula for an inevitable supply shock, a perfect storm brewing on the horizon. The banks that have been holding the short side are now in an unenviable position. They're trapped. With dwindling physical metal available for delivery and burgeoning demand, how long can they continue to conjure up paper silver out of thin air to meet their obligations? The answer, I assure you, is not much longer. The open loops from our previous discussions are now converging. How does this manipulation end? When does the paper market finally capitulate to the physical reality? What happens when the banks can no longer suppress the price? It ends, my friends, when the physical market finally asserts its dominance over the derivative market. It ends when a major industrial consumer, or perhaps a massive institutional investor, demands physical delivery of silver and finds it simply isn't available at the current price. Or just as likely when the very entities tasked with facilitating these deliveries realize they are naked short, holding liabilities they cannot possibly meet with actual metal. This is not some abstract financial theory. This is the reality of physical commodities. We are witnessing an escalated progression right now. Industrial demand continues its relentless march upward, driven by global green initiatives and technological innovation. At the same time, we're seeing a growing awareness among retail investors, a quiet accumulation of physical silver, whether it be coins, bars, or shares in trusts like ours that actually hold the metal. This is not just a few enthusiasts anymore. This is a broad awakening. People are losing faith in fiat currencies, seeing the relentless debasement through inflation, and they are seeking real assets, tangible wealth. Silver, undervalued and underappreciated for so long, stands out as the ultimate monetary and industrial metal. And let me be clear, this isn't just about demand. Production is struggling. Years of low prices have stifled investment in new mines. Geopolitical risks are increasing, making resource extraction more complex and costly. Environmental regulations are tightening. All of these factors conspire to limit future supply, creating an even tighter squeeze on an already stressed market. It's a perfect storm of supply constraint meeting surging essential demand. Do yourself a favor right now if you find this information valuable. If it sparks a new thought in your mind, please consider hitting that like button. It helps us know we're on the right track, delivering the kind of insights that truly matter. And if you want to stay ahead of these monumental shifts, if you want to be among the informed, then subscribe to this channel and join our community. There's so much more to unpack, and you won't want to miss a single update. The development of this narrative is taking us to an inevitable climax. Imagine a situation where a major fabricator, let's say a massive solar panel manufacturer, puts in an order for 100 million ounces of silver for immediate delivery. This is not a hypothetical scenario. These quantities are routinely consumed. Now imagine the bullion banks trying to fulfill this. They can't just print more physical silver. They have to acquire it from dwindling exchange inventories, from what little is left in private vaults, or by attempting to buy it back from the market. But what if the market dries up? What if the holders of physical silver are no longer willing to part with it at prices they know are artificially suppressed? This is where the pattern interrupts truly kick in. The traditional playbook of selling paper shorts to depress the price no longer works when there's no physical metal to back those shorts. The margin calls will hit. The failure to deliver phenomenon, often swept under the rug, will become undeniable. Panic will set in among the short sellers. Their liabilities will become astronomical, forcing them to cover their positions, which means buying silver, any silver, at any price. This isn't just a gradual rise. This is a violent repricing, an explosion of value as the market tries to find its true equilibrium after decades of suppression. We're not talking about minor adjustments here. We're discussing a complete recalibration. When you consider the vast amount of paper silver out there, the amount that needs to be covered by actual metal, it's mind-boggling. The scale of the short positions is enormous, multiple times the annual global production. When those shorts are forced to cover, when actual physical supply is demanded and simply cannot be met at current prices, the market will break. It's not a question of if, but when. This is why I urge you, if you haven't already, to delve deeper, to share this information with others who might benefit from it. The more people who understand this underlying dynamic, the faster true price discovery will occur. The re-engagement point here is critical. Are you prepared for a market where silver, once the forgotten stepchild of the precious metals, reclaims its rightful place, not just as an industrial necessity, but as a genuine monetary asset. Because that is precisely what's unfolding. The geopolitical landscape, the inflationary pressures, the insatiable demand from new technologies. These are not fleeting trends. They are foundational shifts. And silver, with its unique properties and its historical role as money, is perfectly positioned to benefit from these shifts in an extraordinary way. Now for the climax. Imagine the headlines. Not just silver up 5%, but silver surges 20% in a day as supply dries up. Then, bullion banks face billions in losses as silver short squeeze intensifies. The financial news will be dominated by silver. This isn't just about $100 silver, by the way. $100 is merely a psychological barrier, an initial target. Once that threshold is breached, the market will realize the true scarcity. It will understand that silver has been fundamentally mispriced for decades. The shorts will be obliterated. New money, institutional money, money that has historically ignored silver, will flood in. Chasing this undeniable momentum, the fear of missing out, or FOMO, will drive prices exponentially higher. The open loops about the manipulators will close with a bang as their game is finally, decisively over. They will be forced to capitulate, exiting their positions at catastrophic losses, fueling the price surge even further. We will see the physical market, the true arbiter of value, fully assert itself, breaking free from the shackles of paper manipulation. This isn't just a rally, this is a paradigm shift. In conclusion, the path to $100 silver has not only begun, but it is moving with an urgency that is palpable to those who choose to see beyond the superficial. This isn't a speculative gamble. It's a fundamental revaluation based on undeniable physical realities and the unsustainable nature of market manipulation. For the individual investor, this represents an unprecedented opportunity to protect and grow wealth in an era of currency debasement and economic uncertainty. Physical silver, or reputable vehicles that give you exposure to it, is not just a smart allocation, it's a necessity. So, my call to action is simple but profound. Educate yourself. Dig into the data, understand the supply-demand fundamentals, and critically assess your own financial position in light of these realities. Don't just take my word for it. Verify it. And if what I've shared resonates with you, if you believe in the power of truth and genuine market discovery, then act. Position yourself, because the waves are about to crash, and you want to be riding them, not caught underneath. Don't forget to hit the like button if this discussion has been valuable. Share this video with your network, and most importantly, subscribe to this channel to stay informed as this historic story unfolds. The future of silver, and perhaps your own financial future, depends on understanding what's truly happening beneath the surface.